Today, we are going to talk about different tax strategies. Imagine you are the manager of a company, and you wonder how you can arrange your business in a tax-efficient way. In general, you can pursue one of three different tax strategies. You can distinguish between tax evasion, tax avoidance, and tax planning. In this video, we are going to talk about the legality and legitimacy of these strategies. Let's first have a look at tax evasion. Tax evasion refers to any action that is undertaken with the sole purpose of escaping tax payments despite an existing liability. Tax evasion is illegal and leads to significant back duties. Besides, it is often considered a punishable criminal act. Possible punishments are fines or imprisonment. Tax avoidance, on the other hand, constitutes any legal behavior that is solely driven by tax considerations. Decisive characteristics of tax avoidance are the lack of a business purpose, a certain level of discretion, and taking advantage of loopholes in the law. In general, tax avoidance implies a degree of risk and uncertainty as to the consequences of a given tax structure. Although tax avoidance is not illegal, it is still socially undesirable. Tax avoidance decreases the tax revenue of jurisdictions, which affects high-tax countries in particular. Therefore, numerous anti-tax avoidance measures are implemented in national and international tax law. Now, let's have a look at tax planning. Tax planning is also known as acceptable tax avoidance. It refers to the use of existing tax provisions with the objective of minimizing the overall tax burden. This is the legal right, and a legitimate interest of a manager. Examples for tax planning are tax-efficient financing, tax-efficient intercompany transactions or tax-optimized location decisions. However, the distinction between tax planning and unacceptable tax avoidance is often difficult and blurred in marginal cases. This is why, sometimes, the term aggressive tax planning is used to describe tax structures at the intersection of tax planning and tax avoidance. A clear distinction between tax planning and tax avoidance can only be ensured by clear, consistent, and fair tax provisions. To summarize, taxes can constitute a major cost factor for your company and may affect your business decisions. Therefore, you should consider the three tax strategies when deciding on the overall corporate strategy of your company. Tax evasion is illegal and can lead to back duties or criminal charges. Tax avoidance is legal but illegitimate and describes any behavior that is solely driven by tax considerations. Finally, tax planning is legal and legitimate, and refers to using existing tax provisions to minimize the overall tax burden.